Hi, everybody. It's Peter Schiff. It's Friday, December 3rd, 2010. Well, quite a day in the markets today. First of all, we have gold prices surging. I'm recording this about an hour and a half before the close, so I don't know exactly how it's going to end up, but gold is up better than $20 an ounce right now. Silver is up better than 60 cents an ounce. I think we're going to have, this is not going to be a record close for gold, but I think on a weekly basis, it's going to be a record closing high on a weekly chart. Certainly on the gold stock index, the HUI, this is going to be a new closing high on both a daily and a weekly basis. In fact, I mentioned some time ago on this video blog that I noticed that I had seen a change of trend where for years, gold had led and the gold stocks had lagged. And I thought that changed recently. And again, we're seeing more strength now in the gold stocks than we are in gold. In fact, gold stocks are going to make a new high before gold makes a new high. And I think that shows that we have entered a new stage of this bull market that's going to be far more explosive. Because to me, the fact that gold stocks were not really moving showed a lot of complacency or a lot of nervousness or a lot of fear in the market that gold prices would not stay high, that the increase was temporary and that prices would fall. And that was not, to me, signs of a bubble at all, having all that negativity. It was certainly signs of a bull market. But now that I think more people are beginning to accept the fact that higher gold prices are here to stay, and in fact are probably going to get a lot higher, I think we can have a bigger bull market. Also, commodities in general are very strong today. Crude oil, as I speak, is up $1. We're at $89 a barrel. That's a new 2-year high in the price of crude. The CRB in general, all commodities are strong. The dollar, very, very weak today. It's had, I think, 2 or 3 weekdays in a row. The dollar index is now back below 80. It's trading at 79.40 right now. I think the temporary rise that we had in the dollar based on European problems is over. Now the focus is once again back on America and its problems, and it's going to move away from Europe. What was the catalyst today? Well, it was the horrific jobs data that came out. We only created 39,000 new jobs in the month of November. That was far less than had been anticipated. And of course, we actually lost manufacturing jobs again. The unemployment rate actually inched higher to 9.8%. And of course, the unofficial unemployment rate, which counts all the people who are underemployed and working part-time and those unemployed people who have simply given up working, the discouraged, that unemployment rate remains at 17%. But this has put the focus back on the anemic U.S. economy. The fact is the stimulus isn't working. The quantitative easing isn't working. I mean, I guess it's partially working. Ben Bernanke said he wanted quantitative easing because it would create inflation, and that inflation would create the jobs. Well, we're getting the inflation. Commodity prices are rising. The dollar is sinking, but the jobs are just not here. I suppose the unemployed could take comfort in the fact that they're about to have to pay more for food and energy. So we're getting the inflation, but it's really not going to be all that it's cracked up to be. In fact, one of the most disturbing parts of the market today is the bond market. Despite the weak economic data today, bonds continue to be beaten up. You have an increase in interest rates on the 30-year and the 10-year. In fact, the 10-year is trading above 3%. This is the highest yields, I think, since June for the 10-year. And this is a powerful trend. And if we couldn't get a rally in the bond market based on the horrific economic news we got today, this is not a bull market in bonds anymore. Bonds are in a bear market, it looks like. Prices are heading lower, yields are headed higher. So what do we got now? We got rising unemployment, we've got rising interest rates, and we've got rising inflation, right? Remember the old misery index under Jimmy Carter? Unemployment plus inflation plus interest rates? Well, all three cylinders are firing. Things are going to get a lot more miserable here in the United States. And, you know, of course, what's going to happen because of this new jobs report is we're going to get more calls from Congress that we need to extend the unemployment benefits for the people who have already exhausted their emergency benefits. And so many people are actually saying that giving money to the unemployed is actually a jobs program because they create jobs by spending their unemployment money. They actually think there's a multiplier. Some in Congress are saying for every dollar we give the unemployed, we create $2 of economic growth. Well, I mean, this is such complete nonsense. If this were true, we've already extended unemployment benefits for 99 weeks. We've been doling out records amounts of unemployment money. Where's all the growth? Where are all the jobs? In fact, if that's really true, we can create economic growth 2 for 1 by giving out unemployment benefits. Let's up it. Let's double the unemployment benefits. In fact, why give unemployment benefits just to the unemployed? If it's so great, give them to everybody. Right? You can't create economic growth by trying to create demand. You create growth by creating supply. But supply means capacity, productive capacity. It means capital. It means investment. It means savings. All the things that we're not doing is what we actually need to create economic growth. And I suppose this might be the impetus to extend the Bush tax cuts, whatever, to try to stimulate the economy. But all we're going to do is have a bigger deficit. Sure, I want lower taxes, but I want lower spending too. I don't want a bigger deficit because that's going to crowd out even more investment capital, make it even less possible to create jobs. I've been saying for years, right, that we're not going to create any jobs. That as long as the government is artificially suppressing interest rates, as long as they're preventing the market from reallocating capital in our economy, as long as they are subsidizing unemployment, punishing employers with taxes, with regulations, with mandates, as long as we're doing all this, we will never create any jobs. And the market continues to bear out my forecasts. There is no job creation. Unemployment is high. Yet the politicians who think they know how to cure the problem are oblivious to the fact that their cure simply does not work. And all they can think of is more of it. But it's their cure that is actually worsening the very disease that they're trying to do something about. What we need is a different approach. We need a 180-degree change, right? And that's the thing that we're not getting. Now, also, I want to talk about the deficit reduction panel came out this week with their recommendations of how to tackle the deficits. They were correct in one thing in saying that this is a serious problem. Unfortunately, their recommendations do little about it. First of all, there's very, very little in the way of actual spending cuts. And in fact, all they're doing with Social Security is reducing the retirement age by 2 years. But the second year, that doesn't even kick in until 2075, I think. I think the first increase is maybe in 2050. I mean, we can't talk about tinkering with Social Security in 50 years. We got to make cuts right now. We got to do something today. This system is broke. This is a Ponzi scheme. They're doing nothing about these entitlements, Medicare, Medicaid. And there are tax increases in this plan, but we're not going to solve the deficit problem by sending more money to Washington. They'll just spend that on top of the money they're already spending. This is a spending problem. And until we get this under control, until we dramatically reduce the amount of money the government is spending, A, we will never rein in the deficit, and B, we're never going to have a productive economy that's capable of creating jobs because all the government spending is sucking the lifeblood out of the economy. It's diverting the resources that we need to create jobs, and instead it's sending it to Washington where it's simply spent on more government or more consumption. And you cannot create jobs by creating consumption. Yes, we can send people money, and they can use that money to buy the products that the rest of the world makes, but that doesn't grow our economy. That just grows our debts. That just grows our economic imbalances. But eventually, the dollar collapses, and these unemployment checks aren't going to be worth anything. The unemployed will be carting around wheelbarrows full of worthless unemployment benefits because there'll be nothing to buy, because nothing is going to be made, and the rest of the world is going to cut us off. They're going to stop sending us the goods that they produce for the money we print because they're going to realize that we're never going to be able to pay these bills, that we're never going to be able to export enough production to make good these IOUs. Because the more we encumber our economy with taxes and regulations, the more we try to stimulate it with government, the weaker the economy is going to get, the more productive jobs we're going to destroy, and the harder it is for us to ever produce and get out of this debt and pay back our creditors. Anyway, have a great weekend, everybody, and enjoy the rest of the Hanukkah holiday. Take care.